What if the biggest problem with Wall Street isn't the algorithms, the greed, or the jargon, but that the wrong species is running it? Sounds absurd, I know, but stick with me, because when you actually compare how dogs behave to how most financial professionals behave, the case for dogs is stronger than you think. And by the end of this video, you might be wondering why we didn't make the switch sooner. Here's the thing about human finance. We're wired for short-term thinking. We panic when markets dip. We chase trends. We lie to our clients to protect our bonuses. We built a system so complex that even the people running it don't fully understand it. In 2008, the global financial crisis wiped out $10 trillion in household wealth, not because of a natural disaster, but because human beings made a cascade of self-serving, emotionally driven decisions. And the most painful part? The people who caused it didn't go to prison. Most of them got promotions. So, let's bring in the dogs. Dogs, unlike humans, do not have ego. A dog doesn't hold a losing stock for 2 extra years just to avoid admitting it made a mistake. That's called loss aversion, and it costs investors billions every year. Dogs don't get FOMO. They're not going to dump their savings into the next hot crypto coin because their neighbor's cousin made $1 million. That's called herd mentality, and it's responsible for every single market bubble in modern history. Dogs are loyal. A dog financial advisor wouldn't secretly move your money into products that pay them a higher commission. That's called a conflict of interest, and it's completely legal for human advisors in most countries. And perhaps most importantly, dogs sleep. They rest. They don't stare at Bloomberg terminals at 3 a.m. making desperate sleep-deprived trades that blow up entire portfolios. In 2013, a UK study tested whether random stock picks could beat professional fund managers. They could, consistently. A cat named Orlando famously beat professional investors in a stock picking contest. Not a dog, a cat, and even he did better than the humans. Obviously, we're not actually replacing bankers with Labradors, although imagine the energy in those morning meetings. But here's the real point. The traits that make dogs bad at finance, no ego, no greed, no overthinking, are exactly the traits that make for great long-term investing. The best financial strategy ever written isn't complicated. Buy consistently, don't panic sell, ignore the noise, stay patient. That's not a strategy, that's just being a dog. So the next time markets crash and you feel the urge to do something dramatic, ask yourself, what would my dog do? Probably nothing, and that's exactly right.